Hello everyone and welcome back. This is our special weekend edition where we take a look at the stock, commodity and crypto markets right now and the key levels that we need to be watching for the week ahead into the next few months. We've got earnings season kicking off massively with Netflix, Tesla and many more. And on top of that, we have the FOMC Fed coming out for the US, big economic data, and some massive critical support and resistance zones. It's been risk off so far. The question is, will it become risk on? We'll try to answer that together right now. Stay tuned. This will be a great one. Well, welcome back everyone, and I do want to just quickly give a shout out to everyone for not only saying big thank you for supporting the channel this year and the previous years so far, but also I hope you had a happy Easter if you do celebrate that, and if you didn't, I hope you had a great weekend. Let's begin by talking about what happened on the Thursday leading into the Good Friday, and it was a sell-off of technology and risk. You can clearly tell all of the big stocks that many of you like were down, unfortunately. And when we break it down to what really happened, it was selling off from the resistance. Remember, in our previous video, every single one of the markets across the world that were risk on were basically at resistance. Well, we opened exactly there at the real market, not the futures. So we'll take a look at that later in today's video and show you the traps there. And we sold directly off for the rest of the session. The Nasdaq was down 2.28. But the Dow Jones was only down 0.33, a very interesting difference there. And a lot of this comes down to what really 2022 is about. 2022 is not the year necessarily of the traditional, I buy technology, everything's great. It's the year of buying the rotation. That is understanding that sector movements are happening. We try to talk about that here on the channel. Obviously, I do mentoring specifically based on that because I believe, like many other big fund managers do out there, that really understanding rotation is key to being able to be successful in market conditions. And that is all market conditions. This year is different to other years. We've got metals and mining out 1% on the Thursday session, gold, energy, utilities, consumer staples, and a new one, jets. So obviously the idea of travel is back in people's minds. And is it now time finally for this recovery play to actually start to give us some returns? Remember, people have called this many times. I actually was thinking about it at the start of 2022. It's getting close. Let's now really see that exemplified here in the last 5 days of trade. Notice metals and mining up 7% if you're in that sector. Jets up 6.3%, gold up 5.5%. And unfortunately, many of the ones that many people like here, semiconductors, technology, down a lot. Remember, there's a little bit of difference between traders and investors. Technology, is it a great investment? Most likely. Is it a great trade? Not always. And I think that's very important when we start to consider markets out there. What is inflation doing is really the question here. Of course, why are metals and mining, gold, and some of these other things doing well? Well, a lot of it's got to do with the inflation or stagflation trade that people are considering in markets. They're rotating into it. And as we know, inflation is not equal at this stage. Gasoline price, 48% increase on the last 12 months. Used vehicles, we're all aware of these ones. And if we start to scroll through, you'll notice that things like food at home, which is a very alarming one, up 10% over the last 12 months as well. But you scroll down, not all things are equal. Some things are really kind of more in line with what we expect. Things like IT, hardware and services, toys, college tuition, technically not really running out of control on the inflation chart. A great one just to be able to recognize and see what's going on in the markets. Because of this massive increase in inflation and costs, what is Wall Street expecting? Well, we're in earnings season and Wall Street expects one thing, and that is energy better do really well. So energy expectations are incredibly high. Materials are very high as well in comparison to the real S&P 500 expectations. And if you scroll it down, communication services in terms of the main sectors has the worst expectations on it. So will earnings actually be a bit of a surprise from the fact that actually the street is maybe not expecting as much as you think out of Q1 earnings? Is it going to be opposite to what we think? A sell off into it and then a buy on the market on the earnings? Well, I think a lot of that is going to have to do with where we are price-wise. Let's talk about the bullish and bearish indicators leading into the week. We'll have a look at both of them, so hopefully you can make up your own mind and get a little bit more information out of there. We've got the BOFA bull and bear indicator here. That's showing pretty much an extreme bearish fear at the moment, so that means that it's really showing a bit of a buy indication. That's been fairly considerate in terms of the way that markets have gone past that point. And a lot of people do use that indicator to figure out whether there's fear in the street or not. Let's move over here to the sentiment trader report. And when we've seen excessive pessimism such as this and where it is right now in terms of score, we do tend to have an interesting relationship with the market. And that is, look at the 1 week, 2 week, and 1 month later. Kind of a mixture here, a lot of negatives, a little bit of positives, but where it really shines is if you're in it for the long haul. Look at the 2 month into 1 year. If you take averages and you think about right now and how fearful things are and how scary everything is, if you think past this time, have statistics held up? Well, the answer is yes. And you might say, but this is a totally different time. Yeah, I think remaining an optimist in markets can be good, but of course, you need to know when you're trading whether it's time to be an optimist or not. And at the moment, the markets do look bearish on the technical analysis, which we'll take a look at soon. So this is just a little bit of a look into the future on some of those stats. In terms of the week ahead, we have, of course, the tax deadline in America. We've got a whole bunch of smaller economic data information coming out, and the FOMC or the Fed coming out with a meeting. Of course, Jerome coming out to have a bit of a discussion about probably a 50 basis point rate hike. And a lot of people are bringing this chart back around, which is basically that we just saw a bull trap, a potential return to normal. This is mostly for, of course, technology, because of course we know the markets are really selling off technology and high growth kind of assets. And do we have a new low that's going to form soon? Now, we've discussed a new low and what that means. If we get a new low on markets, that is the Nasdaq, it can be very, very bad for the markets. And that would mean or lead into a potential 200 SMA hit on the weekly. We'll talk about how bad that could be very, very soon. But at this stage, we don't know that. What we do know is that every rip, that is every buy up, has been met by seller demand at this stage. We haven't seen for the last really week and a half of trade any rip, that is any buy up, not be met by seller demand. Let's just quickly have a look here at the earnings for the week ahead. As we mentioned, things like Netflix and Tesla knocking off the real start to technology earnings reports. Tesla's probably going to have a decent report, you would think, though there will be some flagging of slowdown in some of their factories due to, of course, what's going on in China. And then we've got Netflix. That'll be a big one here for the street. I think they'll be looking for stabilization, if not growth, in that sector. Snap also kicking it off. So a big week here and a big start to technology that could lead into some serious volatility over the next 2 weeks of sessions. So how are we tracking this year? Well, this is where things get a little bit strange. Remember, we've tracked down, which we thought was kind of in line with other midterm election years. We know these are the most volatile, trader-focused, and fast and nimble kind of years that we see. And then we had a massive rally coming into the middle of March into April. We've sold off. And then the expectation was that maybe we would rally into the back end of April and then, of course, sell off again in really typical style now since 1946 of what's happened in midterms. It is going to be a wild year. Inflation, midterms, every other bit of volatility coming at it. You can kind of tell it's a fast and nimble market if you're day trading, and swing traders may struggle unless they're sector rotating and understanding the market conditions from that aspect. We do have a bit of rotation occurring at this stage into defensives. So unless that changes, you would expect the market to continue to probably fall down. And that is really something that's going to become incredibly important. We need to know what's happening with this rotation. Let's begin the technical analysis by talking about the VIX here, the volatility index. So the VIX isn't as high as you would expect considering the sell-off. And I think that's because it's the VIX of the S&P 500. That is the fear of the S&P 500. The fear of the broad market is not as much as the fear of technology. So we did drop a little bit, and then we've gained here back up to 22.7. A break this week above that kind of 26 level will most likely lead into some pretty fast acceleration of fear, and you might even be at 35 before you know it from the perspective of the VIX. So we'll be watching this resistance this week. The US 2-year is another one that I think is worthwhile putting on your charts. What you'll notice now is that around this daily 20 moving average, we've now bounced most times around that level. If we go, let's say, up like this and we start to see a declining US 2-year yield, that is that it starts to drop due to something the Fed says or whatever, really this will be probably the go-to signal for risk on in the markets. That is that all of a sudden it's okay to own things like technology, semiconductors, etc. Look for that to be comboed with any growth in those sectors. We'll be following along here on the channel, but I think that's pretty important. PCC, put call ratio, not showing us much. What it did show though last week was there was a lot of calls being opened on the Thursday session and the Wednesday session. So actually less puts than you would expect. And the market took max advantage of that by, of course, creating very close to max pain on the S&P 500 and really removing a ton of premium and profiting off us, unfortunately, the retail traders. They really took advantage of us. Where the rotation has been and some really great trades that we've been following along is things like gold and oil, that is to the bull side. And gold continues to strengthen here into our hopeful levels. So we've obviously had a fib retracement on this pullback, and we've been looking towards that 61.8, 78.6 level. We've had strong buying potential ever since this point here. And it's really just been a day trader kind of, experience just moving through. Remember, if you're trading gold, think about gold in proportion to other pairs. That is things like gold versus yen. If you look at this, would you have been better off trading gold versus yen? The answer is absolutely. But you could find the signal on gold versus US dollar. So yeah, really thinking outside that box can give you better results when you're thinking about long shorts, etc. Let's move over to US oil. US oil breaks down our downtrend here. And this was almost what could have happened on the stock market last week. And we'll take a look at that later, but it didn't. And the breakthrough closed above. Since then, it's been mostly bullish. We're at resistance support at this stage. We're looking for it to break through and move up higher. And then of course, next stop 108, you would think for something like US oil. 108 is the next big resistance here once the market makes a new high, which it hopefully can do over the next couple of sessions. Pretty strong chart, nothing too shabby there. Let's move over to Tesla, coiling in the stop here. So let's go down to the 2-hour chart to understand the Thursday session a little bit more. So here's where we opened up. We filled the gap. This is the supports, that 1026. I haven't even moved this. This was exactly where we had that chart, and it just sold directly off that level, going straight back down into the support. So for the week ahead, I think it's pretty clear what we have here on Tesla. We have a coiled market where every rip has been sold so far. If we move under the 975, next stop you would think is around 945, 950. Previous resistances all over this level hopefully can hold it up. And at that point, you may see buying just because there'll be anticipation into the earnings in only a few days. And it's all about earnings. I mean, mark everybody's words really. If the earnings are poor, expect it to go down. Most people will expect a pretty bullish earnings. Who knows? Really, earnings is a bit of a guess. But this is such a critical point here for the likes of Tesla. So something that many will be looking at. And there's the key levels. For the real bulls out there, they're looking for that 1026 plus. And if that occurs, they'll be very happy. Where are things looking pretty bad? Well, again, we sold off here around that resistance for Apple. And when you look at this on a weekly, I tell you, it just doesn't look very strong. It did close on the weekly 20, but it does look pretty weak. And it's just not promising. I mean, we have here a rejection. We obviously knew that follow through was big. We saw this. Every rally has been met by sell demand, which seems to be the story of the current market. We're only 11 days away from earnings right now. It depends where we end up into earnings on how Apple will probably deal with it. So if Apple comes down to here and we're at like a 155, 150 before earnings, there's a bigger chance, I guess, we bounce off after the earnings, more of a buy the fact, sell the rumor leading into it. And if Apple ends up rallying, then of course it may be the opposite. It's all about managing expectations with the market. But yes, new low here formed on the close on the Thursday session. It points towards, you would think, a bit more of a short here in Apple, and possibly we come back down to that 155, 156 zone on this stock. Let's have a look at some of the sectors. So as we said, not all sectors are even right now. Look at this breakout here on XME through the Wednesday to Thursday session. A really nice series of support and resistance levels. We have previous resistance becoming support. We have previous resistance breaking out. What if we get, a bit of a knockdown to the 64 level? Could there be further buying pressure there? You would think so from a technical standpoint. It's also been holding up this daily 20 moving average, which has been incredible support for this particular sector so far. So it's been on fire, and that's just something that I think a lot of us need to think about outside of the box, inflation based. What does well during inflation? The answer you should always know is commodities, metals, all of that type of stuff. They're the ones that perform best. They're ratioed with high inflation. And as we continue to see the 2-year and 10-year going up, unfortunately, those trades will continue to do very well until that stops. Let's move over to jets. So we've been talking about the holiday trade, that is travel. And this is really, I think, travel exemplified. If the airlines break out, they're already seeing increased demand, then you would think the travel trade is on. Now, a lot of people have called travel a lot of times since, of course, this point over here. And everyone's been talking about travel stocks so many times. Is this the point when no one's talking about it anymore, a lot less? I think we're very close here. We've got a beautiful downward trend. We've got, of course, a lightning bolt very close to potential. That is a trough, a peak, a higher trough, and a higher peak. That's all coming together at the exact same point. So jets, even with high fuel, you may think, well, that's stupid. That doesn't make sense. I think people are prepared to pay. And you have to ask yourself a question of, what about your family members? What about your friends? Put it in the comments down below. Have you seen more interest into traveling? Are friends and family talking about it more? These are the clues and signs, the X factor outside of the stats that Wall Street can already see. So remember, think about that from your fundamental perspective as well. It can help. Let's move over to the DAX. Not much here information-wise. The DAX did actually hold above our downward trend. So this was the downward trend. And the DAX is still holding for now anyway. It's frozen at the moment because it's not trading. But yeah, certainly the DAX still holding the 14,000. An interesting one here for that. Let's move over to IWM. This is where things get a little bit more negative on the markets. So we've already had the rejection off the previous resistances. Here it is. Big shooting star, nasty candle. Then we go down, create a trough, we rally, and then we're basically on that support. As you know, a break, close below this support, any return you would think is going to be met by, what would you say? Seller demand. So that is that the sellers might try to come and push this one back down to the previous supports. And that's not going to be very helpful for a whole bunch of risk on takers in the market. So it is looking negative here on IWM, and the bigger picture on IWM, as we remember throughout all of this, let's go to the daily here, is still relatively negative. We still have that Wyckoff distribution. We still have a potential coil that's going on here. And really what you don't want for this is to make new lows. So most people, if the bulls are out this week, what you're looking for is just you need it above 202 really badly. 202 plus close, that will be significant. But if that continues to roll on the smaller time frames, such as that 1 hour, you would think every single rip, especially under 196, any rip will be met by seller demand, pushing it back down to something like that 192 overall. Certainly not a great sign for markets. Let's have a look at the Nasdaq. It's very similar. Nasdaq opened right on resistance. So the futures went a little bit higher, but the Nasdaq opened right on resistance and then ripped straight back down. And let's have a look at this on the 15-minute chart. Just have a quick watch. So look at that. It opens right on the resistance, sells directly off that level, and then closes on the support. At the time of the recording, it's a little bit lower because it's open in the futures now. And you would think that we probably try to rally back up and test this level in the morning, in the Monday session. But yeah, that's where we are. We're basically in a resistance, support, and we're in a bit of a range at this stage. We are currently underneath it by a significant portion. But if it rallies up, remember, it's the real market that we should be paying the most attention to from the support resistance standpoint. At this stage, we've seen this once before. What happened? It sold off, rallied up, and then sold around that range again. So that's what you're looking for again. If it sells off, when it rallies up, what are people going to do? They're going to try to sell the rip. That's what the day traders are doing. That's what the scalpers are doing. And it remains pretty much the better trade out there at this stage. Let's move over to the S&P 500, and we'll actually use the US 500 just to show this. Let's go down to the 2-hour chart. So this is what we were talking about from the Friday trade. So if you have a look at the downward trend here, obviously we have our resistance from the previous session, and we have that bit of a downward trend. We're holding around this zone. We end up opening, because remember, this is the futures market, and take a look at this. It creates a massive liquidity grab stop loss hunt candle. These types of candles you can be incredibly reactive to in opens. If you've ever seen them before, and especially if they ever get you in a trade, you know they've done their job really well. And that is a rally in the morning, usually very close to the first kind of hour of trade, followed by an incredible short off or an incredible long in the opposite direction. When those things occur, they're really what we call a liquidity grab candle, and they often trap a lot of retail traders that are scalping, that have small stops. You've probably been hit by one, so have I in the past. When you see those candles, that tends to, when it rotates through and it moves lower, go for the rest of the day. And that's exactly what it did. It ended up just continuing to sell. Actually an incredible setup there for the Thursday trade. Just a bit of a shame if you were going against it. And you'll notice it's really present in all of the smaller time frames, including the 15 minutes. So something that's pretty important there. We'll go back over to the SPX. Let's take a look at it for the week ahead. We'll start off with the weekly. The weekly is incredibly negative looking. You've got here a rejection, obviously a follow through, not a good candle pattern, bullish, bearish. You know, this is the type of thing that starts kind of new sell-off trends. We're selling again, and we're going to be moving down to the 50 moving average. That is the blue line here. Can it buy? I would think that you're probably moving to maybe even trying to see some type of possibly even 4,300 return this week. And at that point, potentially rallying. But remember, at this stage, it's bearish in sentiment. Every rally most likely will be met by some type of seller demand. The sellers will try to push it down. And it's really what you're looking for now if you're a bull, is you're looking for the little lightning bolt changeover. That is a rally that's met by seller demand, and then a new rally comes out to smash past that. That's when you'll know that all of a sudden things are looking a lot better. And the reason you can always tell this is because when you scroll down through the other time frames, look at the 4-hour, look at the 2-hour, what's really happening here? Peak, trough, lower peak, lightning bolt. Each rally, sell demand, okay? Now, if you reverse that and you go trough, peak, higher trough, higher peak, all of a sudden what happens? Every sell-off becomes buyer demand. That's the sequence we're looking for this week. And at this point, you know, 4,300 could be in the lights of the sellers. If we make a new one, rally, sell off, 4,300, previous resistance, previous supports, certainly a key level. You've got to be fast and nimble, I think, for the week ahead. Let's talk about max pain, because that's a lot higher. So depending on what happens, we might actually move higher by the end of the week. Watch this one very closely. This is where all the options come together and where the expiry for max pain ends up being. 450 for the max pain here. So that's a bit higher than the current market conditions. If we move lower and this remains 450, it could be pointing to a bit of a rally throughout the week. So 450 here on the max pain for the market. We also know that we've got a whole bunch of pretty big greed and fear, or in this case, fear coming into the market as well. And what tends to happen then? Maybe a little bit of greediness later on in the week. We'll be following along. Remember to subscribe if you want to check that out. Let's talk about where we are. We've obviously got the options here. Big strike off, it looks like, just above 450. About that 455, we have a lot of options open. We have a decent amount of puts expiring underneath the 440 this week. And we've got this movement in the middle here, which is fairly important. So we'll keep watching these open strikes to find out what's going on. Now, we want to talk about Bitcoin and crypto. Well, a lot of people are speculating on what's going on in this market. Unfortunately, it kind of looks like every other Bitcoin halving cycle at this stage. We had that initial huge run, okay? Not like the others. We didn't see that other secondary huge run. We almost got it, because when you think about it, this line here is the second run. So we got that second run. It wasn't to the same extreme and new highs as previous, things like 2012, things like 2016, etc. But what I would say is that it's kind of rotating like it was past that point. That is, weakness was coming into the market. Now, if this continues to follow this event and we still see, a slowing down of Bitcoin, and then we see that last drop off, which happens between 800 to 950, could this be a really good buy into the next halving cycle? Remember, the next halving cycle is theoretically over here, but it tends to find its lowest point around 850 to around that 1,000 days after the cycle. That's what actually I'm looking at in these markets. And I think it's a really interesting halving cycle based thing. The more people hate on coins like Bitcoin, let's say, and the more it gets, out of sight, out of mind, the more likely these types of things are to occur and for us to go back into one of these price halving, real bull runs in the markets. Let's have a look at Bitcoin. It is sitting right on the support and it's barely holding on for dear life. I mean, you can see here, it's support, 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 support. We're back to that level. And what it needs to do is it needs to break through this point here, which is around 41,500. Huge level here for it. On support at this stage, needs to break through here to create a double bottom so it can move back up. But at this stage, yeah, it's very tough. It's right there right now. Why is this? Well, I think a lot of it's got to do with shorters coming out. BTC shorts here. There's no water buck, but BTC shorts is what we're looking at. That is the nasty whales. They've continued to play short positions a little bit here on Bitcoin. Not anything like the old previous ones, but it's still risen over the weekend. Not necessarily positive here for Bitcoin. And Ethereum also struggling on the charts, back at support again. So that's fallen back off. Again, what do we need from Ethereum? We need it to go through 3150 and buy back up to create a double bottom and to put a base in what is currently a sell the rip market. Notice it's the same thing as the stock market in many ways. It changed trend in terms of the peak, the trough, the lower peak. And at that point, it becomes sell the rips until we change trend back up. And we haven't done so yet on Ethereum or Bitcoin. If you haven't already, come and follow us at FX Evolution on Twitter. We always appreciate your support. Thank you very much. And for the week ahead, we have a whole bunch of bank holidays for the Monday session. So it's really left up to the US to make some decisions on what it wants to do. And if we scroll through, we've got some CPI coming out for a whole bunch of different countries. We've got Fed Chair Powell, 1 p.m. New York time, speaking here on the Thursday. And it's mostly other countries' information that's coming out. There's a little bit more basic info coming out from the US. We've got earnings in focus, and I think that's what everyone's looking at. Bye for now, and if you enjoyed the video, please subscribe and smash that like button. See you, everyone.